Welcome back. You're watching the newsroom on ET now. Let's get you a gist of all the big movers and shakers today in trade. And the first two stocks on our radar are result reactions, both in the red, by the way. Shree Cement, take a look at the way that stock is falling today in trade. In fact, it's one of the top nifty losers. Incidentally, today is, of course, this quarter was the first time that Shree Cement was included as well in the Nifty 50 and it delivered its numbers. It's largely a bit of a disappointing quarter. The margins in particular did contract quite a bit. So you could say it's a mixed bag. Operationally good, but not as good as what its peers delivered. And that, I think, is something that is disappointing the street. Titan, meantime, as well, down in trade after the Q1 numbers that were delivered. Goldman Sachs has a sell stance, by the way, on Titan. They're keeping their target price at 705 rupees, as they say that discretionary purchases are remaining under pressure for obvious reasons. July retail sales were just 1% higher on a year-on-year basis, and they are looking at normalization only by Q4. Titan as well is falling in trade. But what's really spearheading today's rally has to be the metal stocks, and within the metals basket, more particularly steel prices. Steel stocks, pardon me. So JSW Steel, a good gain. I guess what's further adding some, momentum in JSW Steel stock price is the fact that it has delivered its production numbers for July, and it's shown a 9% increase on a sequential basis. So yes, slowly and steadily, JSW Steel's production numbers are increasing. Tata Steel as well gaining very smartly. In fact, just in this 1 month, in the last 10 to 11 odd days, we've seen almost a 10 to 15% rally come by in stocks like a JSW Steel and a Tata Steel. So these are two stocks in focus. I want to flag off another result reaction, and that is Bank of Baroda. Not the best set of numbers coming in from the counter, and that's the reason why you're seeing this fall as well come by in the stock price. It has delivered a loss. It's delivered a loss of around 864 crore rupees. The NI was largely okay. But look at the provision number. It inflated from 3,300 crores to 5,600 crores. Again, on a percentage basis, there was a bit of stability coming in. The domestic NIMs, however, did contract by 10 basis points. And finally, I want to flag off a stock that has been on brokerage radar, and that's Havells India. Morgan Stanley has an overweight stance on the counter with a target at 696 rupees per share, as they believe the company has led by innovation in the current crisis. It's launched an O2O model which leverages its large offline dealer network as well. So these are the stocks in focus.